Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 141 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, actually the half man of the hour today, right? We have a special guest, Mr. AJ Brown. How are you doing today, sir?
Hey, man, I'm good. Thanks, Sip.
Today is July 12th. We're in the middle of the summer doldrums, right? We talk about slowness. However, I feel like this week we're getting a lot of information. There's a lot going on. What are your thoughts? Where do you want to begin? What are you seeing?
I mean, I got to begin with just this morning's earnings from JP Morgan and Citigroup. So the banks are coming in strong. Although, I think one of our user picks where they sent us a pick by email, I think they sent us a pick a couple of days ago for Citigroup. We'll be talking about Citigroup more, but they kicked off earnings season and both of them beat their guidance, although I'm not sure investors expected anything less from them. And so, yeah, it's going to be a pretty interesting earnings season for, during these 2 months of summer.
And if today kicked off earnings season, we did have some things that did affect or not affect the market, but might have affected the market. Powell testifying on
Yep.
the Hill all week, and he didn't say anything surprising, did he?
No, he didn't. But a lot of investors really took his comments to be somewhat dovish, right? I mean, he did bring up something about how he was a little bit more on not on ease anymore about, the Fed has a dual mandate, which is a lot different than a lot of other central banks in the world. Most central banks, their mandate is keep prices stable, right? That's the whole inflation discussion. But our Fed, as of 1977, has a dual mandate where, in addition to keep prices stable, they also are to maximize U.S. employment. And sometimes, though, not sometimes, most of the times, those two things are at odds. So the Fed is constantly playing one mandate against the other. And he actually referenced during his testimony that he's a little bit unsure of both mandates right now. So that raised alarm bells, and it was just a quick little sound blur, but that's what investors jump on. So yeah, he didn't really say much. He wouldn't commit to any rate drops or any discussion as far as rate drops. He kept going back to the typical Fed discussion point, which is it's all data driven, and we got to see and we got to make sure that we tame inflation. But investors walked away from his testimony, as well as the consumer price index, which was reported on Thursday, which came in really like calm, like way below expectations. It pretty much hit that Fed target that folks were looking at. In fact, let me pull up on my screen over here. I'm going to pull up the investor. This is the CME Group's kind of Fed probability rate. It kind of shows us what the investors have priced into the market. And so if I look at July, which probably has the most confidence right now because it's only a couple weeks away, nobody's expecting any policy changes for July. But look at what happened in September. So, there's been kind of a majority of investors that thought that the first rate drop might be in September. Well, look at the difference. So a week ago, this number was 72%. Now it's 88%, right? So it's almost a given, or at least the market has priced in that there's going to be a quarter point rate drop. Even a month ago, this was just around 60%, and now it's at 88, almost 90%, right? Confidence that there's going to be a rate drop. And then what's interesting to me is, we always thought that maybe there'd be a second rate drop in December. All of a sudden, there's a lot of folks who think a second rate drop might come or as early as November, right? This number just a week ago, this number was at 33%. now it's at 53%, right? So now all of a sudden, maybe there's going to be, there's the market is starting to price in a second rate drop as early as November, and then even the December number. So now it's, instead of just, 1 or 2 rate drops, maybe it's going to be 2 or 3 rate drops. At least that's what's being priced in.
And then in regards to the testimony, it seemed like a lot of the questions were around inflation this, inflation that. And you're saying that it's still kind of in the middle, and the market's reaction seems to be we're still near these highs, and that seems to be the storyline. Like, we haven't got any data to say otherwise.
Yeah, right. Things are, it just is almost unexplained. And, I remember last week we brought up this chart for what we call the SPX EW. This is the equal weighting of the S&P 500. And we saw that this was a little bit different. But look at what happened in just the last few days. Maybe because of Powell's testimony, maybe because of the CPI. A lot of money. We saw some of the Magnificent Seven. We're talking about, of course, NVIDIA. We're talking about Microsoft and Apple. We're talking about, your Amazon and your Meta. And then we're talking about Google and Tesla. Those Magnificent Seven kind of took a little bit of a haircut, not a big one, because they're already seeing those losses that they had a couple days ago come back today and a little bit yesterday. But a lot of money flowed back into the rest of the market. As you can see here, we had this consolidation, almost like a consolidating pattern or a converging pattern since the beginning of April. And it was really stalled there while those big 7 stocks, or maybe even just 3 of those 7 stocks, NVIDIA, Apple, and Microsoft, really pushing the market higher. We hadn't seen that big of a divergence between, the top flyers and the rest of the S&P 500 in, a long time. And, just this week, we kind of had a reconciliation where a lot of money flowed into other stocks.
Yeah, it feels like it's a pretty good start to the Q3. We're getting into, as you said, earnings season, right? So that will dictate a lot of the storyline. And does this bode well for being a premium seller? I know that.
That's what I was going to say. I'm not sure that this bodes well for the market overall. I think we're getting to that point where there's a lot of instability. We've been talking about how it doesn't make sense, especially when we look at our retracement theory. It doesn't really make sense that the market hasn't had a moment to kind of digest some of these gains. And so a lot of the money we're seeing flowing into these companies like NVIDIA and Microsoft and Apple seems to be money that's not usually in the market, right? And we're seeing money flowing in from the old crypto, investments. In other words, it's kind of like this fickle money, right? It's this money from folks that maybe just follow the latest, hot topic. And it's been flowing into this market, pushing it higher. And that creates a lot of instability. And so I'm not sure for the market overall what we have, but, as us premium sellers, and I'm going to echo kind of the Fed on this, we just trade what we see, right? And so what's beautiful with our option trading strategies is we can make money when the market goes up. We can make money when the market goes down, but we can especially make money when the market goes sideways on time passing by and on changes in sentiment and volatility, implied volatility, right? So we've got all these different tools in our tools chest. All we have to do is, pay attention to what's happening and then trade appropriately with what we see. So I'm not sure, as far as the overall market, how the rest of 2024 is going to play out. Things look really unstable. Usually when I say things look unstable, you start to see the VIX go higher. And it's just so surprising to me that the VIX is staying at these lows between 12 and 13. But maybe we're seeing a little consolidation there as well. So I'm expecting, and this is just me. This is a leading indicator. You can call it the AJ leading indicator. I'm expecting the proverbial poop to hit the fan anytime now, maybe right after the summer doldrums. We'll see. But I'll be ready with all my option trading strategies to profit no matter what happens, right?
That's right, and that's one of the big pieces that we touch on week over week is the taking advantage of time and just putting on those positions in case something happens, right? And
Yeah.
pull in a presidential election year, especially this year with these two guys, you never know what's going to happen, and one day it really could move the market. But with that, let's go ahead. We're going to want to get into how we could take advantage of the market. One, using your tools, some of the tricks that you've had in your playbook for almost 20 years now. And then with, our special guest here today, which we'll bring on here in a second, because from the conversation we were having beforehand, I'm very excited to see how to take what he's been doing, apply it to some of the things that we've been talking about. But before we jump into that, I do want to give everyone an opportunity real quick to check out AJ's free daily workshop. He breaks down these 4 strategies in great detail. We will go over a couple examples later on the show, but if you want to understand the fundamentals and some of the core logic behind that, we've got the link to the webinar in the chat, so head on over there. Otherwise, we're going to take a short break. We'll bring on our special guest and we'll go into some opportunities. Let's find some winners. Let's find some way to make some money. And at the end of the day, right, AJ, if the market goes up, if the market goes down, if the market goes sideways, you've got some strategies to take advantage of.
That's
all right, folks. Sit tight. We'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Once again, the link to that is in the chat. And without further ado, AJ, I think it's time to bring on our special guest.
I mean, I got to tell you guys, I've been talking about this gentleman for a while now, right? I've known him, I don't know, over a decade. But Fausto has been, instilling in me a way of entering into my positions through watching order flow. And I have to be the first one to admit that I am still a student of this type of, I call it almost quantitative analysis, but he has it down to a T. And I'm so excited I was able to get him on our show. So yeah, let's introduce him.
All right, let's bring him in. There's the main man of the hour, Mr. Fausto.
There he is.
Puglisi with
handsome devil.
Trading University. Let me pull up the website real quick, because it says since 1995 you've been running the school, you've been educating. Give the viewers a quick rundown of how you got into the business, how you started trading, and what you're doing over there now.
Yeah, that's a great question. By the way, thanks guys for having me. It's great to be on your show, and it's great to that training so many people and they continue to use that same style like you're using, AJ, because you could use it towards anything. You could use it towards crypto, options, swing trading, everything else. I'm looking forward to tell you listeners about it. But yeah, I've been doing this since 1995. I mean, I was like 22 years old. I'm 52 now, and basically, I live here in New York. I was trained by some of the best traders in the world. I was probably like most people, a huge failure because I was a self-taught individual. And luckily, I was able to have somebody take me under their wing. I had a family friend that said, hey, why don't you come in? Let me show you how to actually trade, because I love doing it. I mean, everyone who does not like trading, right? I mean, but obviously there's something going wrong, why I couldn't figure it out. And I'll tell you, AJ, and when I was out there and they showed me exactly that I was basically looking at the past and not looking at the future, which you can. I'm like, well, why would nobody want this? And the real big issue is obviously taking the time to learn it, which is not that hard. Try to get rid of bad habits. and you got to spend a little money. You know what I mean? And it's not like I used to spend back then. Back then, it was like almost 100 times what we paid. Plus, you had to get licensed. You had to split the profits. I mean, it was on and on and on. But listen, at the end of the day, it's it pays a lot. But I love what I do. And then what ended up happening, how I started Cybertrain University was, I was a little bit more of an entrepreneur. I couldn't want to work for anybody. I wanted to kind of do it on my own. But I found out that the only way you could succeed is you have to surround yourself with people like you, people that you could train and, people that could be part of what you taught them how to trade. And that's how I kind of got into it. That's how I kind of got a little better. And I started Cybertrain University. And Cybertrain University, I started the first online trading school. I started with the first webinars. I started the first chat room and everything else. And I've trained hundreds of thousands of people over the years, and I love it. And I do it every day. A lot of schools are out there, are students of mine, and everything else. But nothing really has changed. Nothing really has changed. Everything is pretty much the same. Other than, like I said, technology got better, ticket charges got cheaper. You don't got to work for somebody, and you could apply for everyone. But yeah, it's been fabulous.
And you and AJ are going to be teaming up next week for a co-hosting webinar where you'll go over, in more detail, maybe some of the things that you're doing in the rooms, in the courses, specifically on some of these order flow trades. And so we're going to go ahead and invite everybody to that. That's next Wednesday, I believe, 8 p.m. Eastern. So we'll get the link to that in the chat so everyone can go check it out. But with that, AJ, do you have any, questions that you want to get the ball rolling on how we can tie what he's doing with what you're doing?
I would love if Fausto could, because we're using these words like chasing order flow or following order flow in order to get entries and exits. But I'm sure that a lot of our listeners, they're like, what are they talking about order flow? So maybe just a basic 101 overview so that people would be primed and want to come and see you talking more about it and give us actual tangible stuff next Wednesday.
Sure, no problem. I'd love to show an example of what we call level 4. So let me just share my screen really quick and kind of show you what I got going on here. So basically, this is more of a heat map. And on the right-hand side, you see where it says COB. That means current order book. Now, what you're seeing over there on the right, those are high-frequency trades, algorithms, institutions like BlackRock or Goldman Sachs, and all those orders that you heard about that are in the street, that's where they are. Okay. So what you're seeing is you're seeing numbers, and what happens, people it's sometimes a little overwhelming. They see all these numbers and I don't understand. It changes pretty fast and everything else. But what I like to show you is when you look over here, we're looking at, let me bring up a brand name stock. What was a pretty good one today? Was NVIDIA pretty good today? I know everyone likes to trade NVIDIA. All right. So NVIDIA is pretty not bad. Okay. So you could see here down at the bottom is 9:30 in the morning. That's when the market opened up. And then you could see before that, that's pre-market trading. It's like a light blue because obviously there's not that much volume. And then when the market opened up, this is where program trading kicks in. And you'll notice that red line right there, the bigger, the thicker the red line means the more orders are at that specific price. So when you're looking at a chart and you want to try to figure out what is support and resistance levels, well, let me just be clear if everyone understands something. Support and resistance level does not exist unless the buyers and sellers are out there. So as much as you might think there's support and resistance levels in the past, the only way it's going to be existent now, you got to see in the future. So right here, we're seeing two very large orders between 138 and 140. And you got 900,000 shares at 138, and you got another 146,000 share seller right at 140. Now we're trading at 130. So you're talking about $8 to $10 away. Now, let me just bring up a chart really quick here, and maybe this will explain a little bit better. Now, if I zoom in over here, and if I drew a trend line, you could see here clear as day, back on this day right here on June 20th, the high was 140. And when it hit 140, it came right back down to 120. So you're like, okay, well, that was a resistance. How would you have known that? Now, you could slap any indicator, anything on there. You won't see because you're breaking all-time highs. But the reason why, and if you had a game plan, and if you saw that order, you probably would have got out, right there, because that's a big block order. And then you could see how it came back to 120. And then yesterday it tried to go to 135, never got to 140. So you're kind of getting a sense of direction of, okay, maybe I want to do some program trading. Maybe I want to put my limit orders out there, my stop order losses. Now you're seeing the stop orders losses out there where the street is. So you're basically seeing about right here, about maybe 50% of every single order in the entire world that is trading NVIDIA. Now, it's funny. I posted a video on this yesterday. I do a lot of short videos on my YouTube and Instagram, TikTok, whatever you're a fan of. And it kind of went a little viral. And I always get a lot of questions, and people says, "Oh, you know what? How do I know these are real orders? How do they fake?" Or, "Oh, that's not really a lot because stock trades, with the split and everything." Listen, they're real orders. Number one, if you don't believe me, go execute it. And number two, you know what? Is it going to hurt you, not to know where the street is? I mean, I was always taught, when you think you're smarter than them, that's how you're going to lose. You don't need to be a leader, just be a follower. And NVIDIA is just one of several that we could look at, but that's basically in a nutshell. Kind of just gives you an explanation of where's support, where's resistance, because it's those buyers and sellers that make those support and resistance levels.
So you guys, I who are listening, do you get what he's doing? So he's got this NASDAQ level 4 information in front of him, and he can see where the orders for buying and for selling are placed, those limit orders, right? And so that is dictating, that's in real time dictating, if there's a sell order at 140 or whatever we were just talking about, that's going to, cause the top to be found, right? So he's got that window into what investors are doing right now, and he can either use that as a standalone piece of information, or he can correlate that with previous highs and lows, and it just gives him that extra edge, right, Fausto?
Exactly. And to add into that, AJ, is like, I know you're a big options person, and when you see these strike prices and you want to know what is the strike price, just remember, the reason why they call it options, it's another option to trade the stock. And remember, the way an option move is the movement of the stock that makes an option move. So when you have those strike prices out there and wonder, like, why is there a strike price at 140? Why is there a strike price at 150? Okay. Why is it more at one price than the other? Well, those orders are being placed out there, which you're seeing right here. So you have a little bit of a game plan. And if you want to know if a stock's going to break that strike price, well, here you're going to see the orders taking place. And, and the thing is, like, I was actually going to make a new video when I was running a little behind, but I'll post it up when we're done. But like today, I'll give you an example. Like today, we trade a stock like Revvion. Okay. Now, I don't know what's going on with the EV stocks, but they're all moving today. Revvion, LCID, and all of them. But I want to point out this Revvion trade. Well, is it Revvion LCD? I think it was LCD was pretty easy, I think. Yeah. So you see this little red line, AJ?
Mm-hmm.
Okay. Now I'm going to zoom in. I want to show you listeners something pretty cool. Could anyone see how much money that is there? Right there, where it says 390.
Mm-hmm.
Okay. So that is close to about between 390 and 396. You're talking about maybe about 500,000 shares are going to be sold. Okay. And you could see how the stock started this morning, and it went from like 390 and it went to $4, which is a pretty big move. If you bought 1,000 shares, $400, it's a nice $100,000 salary. So don't underestimate it. But the thing is having a game plan. Well, it hit that number and it came back down. Now, what I want to show you is this. I want to move over. And then right here at 390, let me zoom in a little bit closer so you guys can see it here a little bit better. Okay. Now, you'll notice here right around this time, a little bit past 305, another red line showed up on the bid. And that was about a 400,000 share buyer. When that buyer showed up, that stock just took off, right? It went from 390 to $4. It went to $4 because remember, support levels, buyers, resistance levels, sellers. So stock went up. Now watch this, is pretty cool. Do you notice how that order disappeared? Right there. See, it's not red anymore. You see what happened there is that buyer says, screw it. No one's selling it to me. I'm going to go buy it. See that big green ball right there? that order, that guy canceled his order and he went out there and he executed those 400,000 share sellers out there. And then from $4, as the day went on, look, there was no more sellers and the stock ran and kept running and kept running and kept running and kept running and kept running. And, you know, the matter of from 10:10 to 10:25, 15 minutes later, kept running. It ran all the way to 4:30 like that. And there was people trying to sell it on the way up, but they kept getting executed. So this is a little bit more easier way of looking at it. And they do this on every single stock. They do it just some stocks like a little bit more controllable, a little bit more easier. And that's kind of more or less what we kind of teach our traders. Now you could apply this, like I said, they do this on cryptocurrency because there's a crypto one. They do it on, you could do it on swing trading. I'm preferably a day trader because I like to just sleep at night. You know, I like to, I do swing trade a lot, but not, you know, day trading is just like, you just make your days pay and that's it. But what you're seeing here is you're seeing how order flow is getting executed. Now, I know a lot of your listeners out there, like, how the hell do you see the 400,000 share sellers out there? I mean, like, well, it depends what you're using as a tools. These are the tools that I was trained on, and believe me, nothing has changed. And one last thing I want to bring up here, on my YouTube channel, I want to show you something. So I'm actually a regular guest at NASDAQ. NASDAQ, listen, the exchange themselves want you to learn how to trade and trade the market. So I actually was one of the beta testers on their ECNs that helped build these platforms. And, you know, I have some great short videos. You can see a lot of great examples, but let me tell you, if NASDAQ has me on there and they want to have you guys to understand how to trade the market, they obviously are doing it for a reason. Because remember, the exchanges feel like, listen, if you go out of business, you don't trade, they don't make any money, right? They don't want people to lose money in trading. They want you to continue to trade. You know, they don't want you to go out there and make those mistakes and lose money on it. So that's basically, so if you guys got a chance, and I know we're going to be doing a video, we're going to do a webinar. I'm going to go into more detail about this.
In depth, yeah.
Yeah, big depth about it Wednesday night. So don't miss that. I think you guys are really going to enjoy it. I got a great PowerPoint for you. You guys set up for that. But I'll go into great detail of how to do it. And I'll show you where to get it. I'll show you how to set up the defaults and everything. But and you go directly through the exchange. You don't have to get through like TD Ameritrade or Schwab or anything. You go right to the exchange. It's cheaper, it's faster, you know, and it's better.
And what's cool, you know, Fausto was mentioning how he likes to do the day trading, but you could use these exact same signals to decide, like, for instance, when you sell premium, when you're at the top of some sideways choppy channel, when you're at the bottom of that channel, when you want to go ahead and, you know, buy to close that premium trade, when you want to remove that protective option. You can use these signals generically for any of your adjustments. So this works for any of our premium sellers as well as working for day trading, swing trading, crypto trading. It's a tool in your tool chest for identifying, you know, where is the top going to be right now? Where's the bottom? When should I, you know, make my transaction? It's amazing. I've been following you for a while, Fausto.
No, and thanks. And listen, you know why, AJ and everyone else, great traders never stop learning. You know what I mean? True. It gives you just that little edge. Like everyone, let's say everyone likes ice cream, but some people like vanilla, some people like chocolate, but we all like ice cream. So, but the thing is this, in trading, we all trade about 70% the same. So a lot of it's psychology, a lot of it's discipline, you know, that
position sizing.
Yeah, all that. And then just listen, eventually just find your niche. You know, like some people don't like to day trade because they don't have the time to do it, you know, but so they'll do swing trading. They like it, but could they apply to that? Or maybe they like the option trading, you know, a little bit more because certain leverage that they have to it. And if you have a good educator like you know, like you, AJ, and people get it, you know, and you adapt to that person, you know, you're going to have to spend the time to do it. But yeah, we all have our little niche. And, you know, one thing I like to do, what I do is like, I'm a little more universal. So you could apply this towards anything. You know what I mean? If you're whatever kind of trading you are. But the thing everyone has to understand is this. When you think you know something about the stock market, you're going to lose all your money. And
it's true.
It's a fact because you're not, think about it. Like I did a really cool video. You got to watch, and if you guys ever watch it, the big move was GameStop. All right. Mm-hmm. So, and I'm not talking about 3 years ago. I'm talking about 2 months ago. So, let me just bring up GameStop. So we also, let me just bring up the chart here so you guys see what's going on. So right here on May, and if I go through my videos, you can watch it. But we saw this stock make the big pop right around here, around $12 to around $17. And then obviously, like, what the hell's going on GameStop? You know what I mean? So we all went long GameStop around like 15, 16, and we end up getting out. I mean, I got out at like 27, 28. I'm like, this thing went up way too fast. And then the news came out about with Roaring Kitty and all that. And now the stock went to 65. Yeah, I blew it, but sure enough, it came all the way back down to 17. The thing is, what was great about this stock is like, if you watch one of my videos, I showed on it, Wall Street always wins. Okay. They got trillions of dollars, not billions. They'll short this thing if it went to like 200, 300, 1,000. It was a great, fun movie. I saw the movie after being in the trade. I never saw the movie. Generally, get to watch it. Pretty cool movie about it, how it worked. But the thing is, you got to know exactly what drove that market up. And you got to know what a short squeeze is. And you got to make sure you don't get caught in a short squeeze. And, you know, you can make a lot of money doing it. But you got to be very conservative about it. But that was a pretty cool movie, a move. And I don't know if you were. And the funny part, I was listening to his he did a webinar on YouTube. I couldn't believe it was like 600,000 people in there, you know, on that day. I think when was it? I think it was this day right here. He did it when he came out. He made the news on the Friday he was coming out with. But you just got to know how to play the game when it comes into it. And, you know, and like I said earlier, if you think you're smarter than Wall Street, you're going to lose all your money. Just listen. You just want the crumbs on the floor, make your day's pay, and that's it. Because you don't want to get caught paying 60 and now the thing runs down to 17. And I know a lot of you listeners out there probably been there and done that. And it's because you didn't follow the money.
Yeah.
I think
it becomes quite straightforward when it's like that. Go ahead, Sip. Sorry.
I think you made a good point, Fausto, where, you know, you've been doing this for 2 decades. AJ has been doing this for 2 decades. You want to get in the game and you want to be able to sleep at night. And it sounds like you have good strategies to sleep good at night. AJ has good strategies to sleep good at night. And so I'm super excited for everybody to jump in that webinar next week to mesh those 2 strategies. And I think everything that I saw on the book, the order flow charts, was very interesting. I mean, personally, I have a bunch of questions, so I can't wait to get the members and the audience in there to ask it.
Well, not only that, you know, ever since Schwab took over TD Ameritrade's Thinkorswim, which is like what a lot of our option traders have been using, boy, it's given people headaches, especially folks in Canada, where all of a sudden Schwab just said, hey, it's no longer accessible to you. So to be able to get these tools right directly from the exchanges, I mean, that's worth just coming to the Wednesday webinar next week just to find out how to get
through. AJ, not to cut you off, I had great news. You could actually get level 4 on Thinkorswim. I actually did a video on it. I'll show you how to download it. So imagine it's actually the only brokerage firm that you can get level 4 quotes on. And I think you're going to love it. And every single guru like you, and I tell them that, they're like, holy crap, really? I can get this on this? Because you can't get it like on any other program out there, but you can get it on there. And remember, it's not an indicator.
No,
okay?
It's
not
just
indicator.
Data.
It's just data, you know, and now you're going to be able to see the future of it. So if you really wanted to know exactly how to install it, and I'll go into detail about it on that Wednesday webinar, definitely want to sign up for that event because it'll blow your mind when you start seeing it. And it just makes your life a lot easier, you know.
It's super powerful data. If anything, it's way more than just validating data. It is data you can actually take decisions on. So I absolutely think that's you know, people need to sign up for that Wednesday webinar and get the skinny.
So the link to that is in the chat. Fausto, thank you very much for hopping on, taking some time to give us a little intro to what you're doing there. I know AJ's got his pick of the week. We've got our speed round. If you want to stick around, give a little bit of input on what you're seeing, we'll try and run through those.
Yep.
Otherwise, we're gonna, you know, give everyone an opportunity to sign up for that webinar. It's gonna be exciting stuff. Yeah, go check out.
Stick
Fausto.
around, man.
No, I got nowhere to go. I love to stick around with you guys. You call them
Good.
out, you look at them. I'll tell you what I see on the order flow, and we'll see how
Perfect.
it goes.
Yeah.
Make it
All
fun.
All right, AJ. Well, let's go with your first. Let's go ahead and get your screen up here. We'll go with your pick of the week this week. This is Carriage Services, ticker symbol CSV. What do you
So
see it? Why are you liking it?
Yeah, I absolutely like these boring sideways stocks for our premium sellers because we'll set up our initial covering position, whether we're buying the stock. And in this particular case, I'm not seeing a lot of activity on those far out in time, like leaps where we would do a substitute. So I'm thinking we're going to be buying some stock here. I got a signal last night on one of my indicators. That means I should be looking at it today, but I'm not really getting the follow through that I wanted to see today to give me the signal to buy this initial covering position. But once I've got that stock, and I'm going to buy it in lots of 100 shares. So whatever I can do, 200, 300,000, just increments of 100 shares. I'm going to get that in my portfolio so that as we approach that $29, $30 mark, we could sell premium. And if it goes higher than that, well, then instead of selling premium, I'll just get out of the position and take the money and run. Fausto, what are you seeing for today or in general?
Well, regarding, it's funny you brought CSV because I own a company called CSQ, and I thought it was the same company because if anybody here likes, nice dividend plays, that company pays 8% a year, and I thought it was the same because I know they have multiple CSQs and CSV. I thought it was one of them. I don't know the name of if it's the same business, but I know that the letter knocks me off. But yeah, they pay you every month, and it's actually been doing pretty well. But this is a really nice stock. That and the number that you brought up is pretty funny. You brought that up because there is a couple of big orders, not a lot because it doesn't trade that much volume, but there are some orders out there at $29.50, and I totally agree with you. If it does break it, the stock is off to the races. It looks like it's testing its June highs if it will get there, but it does look like a good call.
Yeah.
Stocks that we're looking at today that are moving pretty decent. Like I told you, all the EV stocks moved. As a day trader, we're usually done around 10:30 because that's when algorithms stop. So you could see like LCD how it just stopped exactly at 10:30 and so on. So we're pretty much done until about 2:30. But what I'm going to be looking for going into this afternoon, first of all, you probably all know this. Friday is not really a good day to trade. It's the weekend. It's the summertime. Over here, I live in Long Island. These people going to the Hamptons. They're $1 million homes. They're pretty much leaving. So you don't really get that much action, even though we are up about 300 points and we're testing 440,000, which is all-time highs on the Dow. And the S&P just broke another all-time high, So it's been great for us, But I would like to see some of these stocks that are probably like trading at the highs going into the close. And as a day trader, I'll look into maybe getting a push going into it.
And AJ, that's a great way to kind of use your free indicator. That's talking about the reversals, and then looking at the order flow, see if there's a little bit of confirmation. And then if we could get that into the Thinkorswim platform with some sort of cohesiveness, I mean, it's off to the races.
Yeah.
All right. Well, that's Carriage Services, ticker symbol CSV. We'll keep an eye on that one. Let's dig into our speed round. We've got a couple names from all around the country, actually all around the world, that we're going international today, with a couple names that the people want your feedback on, AJ. So let's start with Quay or Q from Quay from Mexico. Interested in this is a new one for me. Sam Sarah, ticker symbol IOT.
All right. So Quay, definitely he's in our family of premium sellers. And this candidate, really interestingly enough, is sideways choppy, barely making earnings every quarter, but at least it's positive. A company that's making money is making money. Listen, I like how often they top and they bottom here because it kind of aligns with our option expiration dates. So we can get in, sell some premium, yada, yada, yada. I see that we had kind of a fake out over the last week and now we're heading higher. I almost, and I'm curious what Fausto sees, because up here around this $42 mark is where I would expect that we would, want to start thinking about perhaps even doing some shorting or buying some put options against Samsara. And then, depending on how far it falls, you could then write premium against those covering positions. And so that's kind of my thought process here, but I don't want to do anything until we get a little bit higher. And let me just look at the option chain, because that's all telling. I like to, if I'm going to use protective options, I'm going to go about 3 to 6 months out. And so I'm thinking about, October, November, December. If I look at these October options, so one thing you want to pay attention to is that, the increment in the strike prices. This has the most traditional of the option increments, where once you're above $25, it goes every $5. If you're going to be architecting an option strategy, you got to make sure that if you're, buying or selling options at those strike prices, whether or not you're going to be able to encapsulate, especially if you're using a range bound option strategy, encapsulate that price action. And so I'm looking and I'm thinking, yeah, I could probably do something with these 30 and 40 strike prices and encapsulate the majority of the price action. And so, yeah, I'd be into this. I think, Kui, this is a nice stock, but I'd hold off. Let's see what Fausto says about, what he's seeing as far as tops and bottoms.
Yeah, the numbers that you're calling out, and also the strike prices you're talking about, they're already out there. You can see the orders are out there. They're not that many as like some of the big iceberg orders that we see, but you got about 5,000, 8,000 right around there, around $40, $420, 40, 75. This big order out here at 40.75 has been out there forever, because you could see it's going into the pre-market hours. I mean, that's been a limit order that's been out there forever. You had a couple of orders trying to getting filled here earlier, but there's a lot of kryptonite holding it down around the 37.50. Once again, it's not my kind of a stock that I would trade, because it's very slow and very low. But if you're looking for those target numbers, those are the numbers that you just brought up that you saw in the options. You could see the orders are already out there, in the real market hours.
It's like having a crystal ball. It's like knowing exactly what the heck is, out there. That guy's got his good till canceled order at 40.75. That's, that tells you a lot, Kui. So, you can go from there.
Awesome. Love the validation on that order flow. Let's see if we can keep the party going with our next two names. And AJ, you did bring this one up at the beginning of the show, so I'm curious. This one might have a little bit more love on the order flow, and that is Citigroup. This is Sean from New York City, New York, interested in what you're seeing in Citigroup, ticker symbol C.
Well, I'm curious, Sean, if you did one of our volatility plays leading into the earnings this morning. So that's where, when it comes to earnings, and as far as, how I don't, you never know. You never know unless you've got some sort of insight into the company, you never really know what's going to happen after earnings. But one of the things that is predictable is that folks get a little bit fearful, and the week before earnings, they start to pile on options, right? Because options can be used as hedges. And so we see the price of options, it's called the implied volatility, start to go up. And what we can do there is we can actually sell those options going into earnings and then buy to close them on the way on the outside. And what's nice about Citigroup is, yes, it dipped a little bit this morning, but it's already recovering its price. It hasn't really had much net price action. But if you were one of those folks, Sean, who sold those options when they were at their high price, I can already see in my chain that people are already like doing one of these, and they're starting to relinquish those options that they bought as insurance policies. The price is coming down. You can get ready to buy to close and probably make a profit on just that run up ahead of earnings. I'm interested though, because there's probably some directional plays going on here, and I'm not sure how order flow plays into earnings dates, and that might be something we cover on Wednesday, but maybe Fausto can give us some ideas on that. What do you do around earnings, man?
Well, you know what? We're going to earnings seasons right now. So starting next week, it's going to get really packed up, and pretty much everything is going to be very similar, looking like with Citigroup. But you know, that's just Citigroup didn't work out too well. You had Wells Fargo took a big hit today. But getting back to that, this is a great trade. Thanks for bringing that up. Citigroup is a very good example of showing you order flow. So the stock took a hit from $67 and it tanked. And when the market, and you could have saw it actually happening during the pre-market. I don't know if a lot of you listeners know how to use pre-market, but we start trading around like 7:45, 8 o'clock in the morning. And that's when this news came out. But it came back down, and you could see it. It tested this $64, and then it broke it. And it went all the way down to 63.50. Now, if you notice here from 10:30 until now, which is almost 12 o'clock, you talk about an hour and a half. And then you just made a good call. It just broke out. And I want to kind of show you this because this is a really good example of seeing order flow. So right here, you could see here early this morning, there was this big, see this big orange line. This order's been out there and it's been testing it. That guy was not giving up. That's what we call refreshing. Okay. Meaning he was a buyer. He got executed. He had more. He got executed. He bought more. Remember, a lot of these traders are not going to, they're not going to expose their full hand. It's like poker. You know what I mean? If they did that, then everybody would know what they're doing. Because remember, they're just not competing against you and I. They're competing against their buddies right next to them in the street. But what happened right here is it was a big resistance levels at 34. And if I zoom over here and you can see that order right there, which was, it's not as big as the ones I showed you before, but it's about 31,000 shares. That order got filled. That green ball that you see right there, that is called time and sales. Those are transactions that take place. The bigger the ball, that means the more transactions took place. That order got filled. Because remember, resistance levels can be broken, right? People could say, yeah, I'll buy it at $64. And if you didn't see that happen and see that actually come to fruition, you just had a nice little run from 64 to 65. So it was a great dollar move right there. And you could see now all of a sudden a new seller showed up around 65. Not as big, but what happened here, where I want to point out, is that was such a big order. And the bigger the order and the bigger the execution at that order, the faster the thing will fly, like I showed you on Revvion and on LCID, the EVs. And that was a great call right there. But that's how you can follow order flow, and that's how you can kind of get a little bit a game plan. Should you jump in now? Should you wait? Or whatever it is. But it's all about being very aggressive and seeing those. But this one moved a little fast for some of you. But there's slow ones out there. But that was a great call. I like that one.
What's neat about what Fausto said, by the way, is that whole pre-market thing. So as you guys know, the options market kind of just opens when the regular market opens. And sometimes we're caught with our pants down. We went to bed the night before, all, rosy, happy. We tucked ourselves in. And then whatever happened during pre-market, when the options market opens, all of a sudden there's this immediate update. And where we were all fat and happy last night, now all of a sudden we're white knuckling it. By having this access into the pre-market kind of order flow, you'll already be prepared for what's happening and be able to make those decisions right when the market opens. That's gold right there. Another reason why folks need to come check you out on Wednesday next week.
Yeah, there's so many things on that what you keep pulling up that just are unique colors and bubbles and
it's a pretty cool tool, isn't it, Sip?
You could probably spend a whole hour just digging into that. But let's stick to our speed round here. We've got one last name in the financial sector. It seems like we're getting a lot of action there today. This is Terry from Dayton, Ohio, interested in KeyBank, ticker symbol Key, or KEY, Key.
Yeah. So this is one of the ones that, to be honest, I've been trading on and off for the last 15 years, right? Because this is a smaller mid-sized bank, right? And if you take a look at their option chain, they've got smaller increments between the strike prices, which means when I architect my longer trading plans, I can get like down to the dollar, right? And so I've always liked it. And plus, it's kind of a boring stock. It kind of got some excitement over the last years when some of those mid-sized banks were failing. But let me just pull you guys back just so you can get an idea about why, as a premium seller, I love this thing. If I go back 2 years, you'll see that KeyBank, they have those moments. Like I said, all of the mid-sized, smaller banks kind of got put in the news a couple of years back. But for the most part, for the last 15 years, KeyBank gets stuck in this sideways channeling. They give their investors dividends. They're always making money, but they're just not popular, right? That's like an option premium seller's dream, something that's not in the news, but yet, it's a solid company. It's not going anywhere. So now that I bring us back to our future, I mean, back to the, bigger slice of time in the last couple of months, what I'm seeing here is that we probably have some sort of level down at around $13 and maybe 25 cents, $13.50. And then we're back up here around $15.25, $15.50. And we're coming up there again. And I'm going to be looking to see if there's some sort of top that forms. Because if there is some sort of top that forms, here's where I want to, put that initial covering position. In this case, it would be either a short or it would be buying some far out in time, deep in the money put options, which would then allow me to then sell the next couple of months of put premium every time it bottoms out. So I'd probably be looking for something around the, 1550 type zone for some sort of signal of a top. What do you think, Fausto?
I listen, I could agree. Again, you can see here on the long-term chart, this stock is a dog for that. It's at a major resistance level. So like, I would not be interested. I would be out of this stock right now. It's for the past year, it hasn't gone anywhere. And like you said, I went back like you did. I went all the way back to 2022. And you could see that when you break through a support level, that support level becomes a new resistance level.
Mm-hmm.
So a lot of support levels back in here about 2022, around October. Even, a little bit higher than that, around 16. And then when it broke it had that major issue. Actually, I think KeyBank was one of the, if I'm correctly, I think it's in the same industry as Bank of New York, and they all got crushed with the real estate market. I mean, they're getting destroyed. All right. But anyway, because I see that big dip right here. But anyway, you can see it's been having a really tough time getting past this 1550. Now, when I go over here, you can see over the course of the day, same problem. Big resistance levels right here. Now let's go check out and see where the order is. Well, what do you know? There's a big iceberg order. You got 91,000, 19,000, 15,000, and like you said earlier, program trading doesn't kick in until around 9:30, and that guy's been out there forever. Okay. So until someone takes out those 120, 130,000 shares, then you see
how going higher.
Yeah, it'll go higher, but it's not going higher until he's leaving or someone's executing him. And from what I look at it from long-term, and the longer it's been trading there, the worse it is. It's harder to break through it. So I kind of use this little metaphor. Anyone in construction, you see people pouring cement, right? You're pouring cement. If I sit that same spot, I keep pouring, it just becomes thicker and harder to break. So, you don't want to be breaking cement there. You want to break it where you just came by and just did it. So in the metaphor, when you're looking at a stock, the longer it's trading there, the harder it is to break it. So that guy's been out there for a while. I don't know how long he's been out there. It's the first time I saw the stock. I don't really trade a stock like this, but you could apply it towards anything. And from the look of it, it could have break it. Yeah. And you know what? Let somebody else break it. You know what I mean? Why should you be the guinea pig and wait until if you bought at that bottom, take that money and run.
Mm-hmm. Or start selling your call premium.
Start selling your call premiums.
There you go. I'm telling you, that's what we want to see is actually for what we're doing. We want to see where it's stuck between a couple of levels, because then we'll just start selling those premiums every month, having them expire worthless and making our little income checks on that.
And you know what? That's only, and I'll be honest with you, AJ, it's like some of the best option plays I find that people make most of their money on. Everybody wants to take these quick little shortcuts and these high leverage ways of trading options, but that's like really you don't make a lot, but you make consistent money.
It's consistent. And just like you like to be done for the day, I can sleep well at night just having these trades out there that are going to expire worthless every month.
That's what you want.
Yeah.
All right, Fausto, thank you once again for hopping on. I think this has been amazing. I think our viewers have enjoyed it. It's definitely something a little bit more exciting than we're used to digging into.
Guys, order flow and order flow technology. You got to come on Wednesday and hear more about this.
So once again, the link to that webinar is in the chat. I'm sure you'll be getting some emails this week. Bring your questions, right? You're going to get a full hour to dig into, the details. And if you have specifics, that's going to be a great time to dig in there. So Fausto, once again, thank you very much for hopping on. Thank you for taking some time. We look forward to seeing you again on Wednesday and digging into some more of the details of what you've been doing over at Cyber Trading University.
Yeah, and if you guys can't make it, listen, it's going to be recorded.
Yeah.
You'll have our email, so you could go look at it later. But if you could show up, it'd probably be the best thing. If you have any stocks you want me to check out, if I get your brain thinking a little bit, watch some of those quick little shorts on our YouTube channel or TikTok or Instagram, just to see what's going on. And I'm telling you, like when you come on Wednesday, you'll be at least it's like you're ready to go to class, and you'll have good questions to ask. You won't get overwhelmed. And like I said, I got something really, really special to offer every one of you if you do show up. And I think so it's going to be my thank you for being there. Because listen, the one that educates wins. So the thing is, if you win, we all win. We all lose if everybody loses in trading. And, and it's one thing that we all have to, we deal with, every day. There's a lot of bad actors out there. There's people who think like, they learn from the wrong people. Listen, great traders surround themselves with great traders. And that's why I'm here. And that's why you've been around for so long. So if you want to know how to play the game, here's your great chance to learn it. And it's basically so simple.
Awesome. Can't wait. Once again, Fausto, thank you once again. Enjoy the rest of your day. Enjoy the weekend. We can't wait to see you again on Wednesday.
See you all then.
Awesome. That was very insightful, AJ. I mean, I've seen that kind of technology before, and it's always felt overwhelming. But when you get a little bit of a introduction from a pro that's been looking at that type of, I mean, that really is the legacy of trading, right? That's kind of where it all started.
He is the person for order flow. I've been studying, his stuff for like 3 or 4, even 5 years now that I think about it. Fausto's really got the, the corner of the market. He knows how to see, what's actually happening. Again, I call that quantitative analysis, but it's like following the order flow. And, you don't want to argue when you've got somebody out there who's had a good to cancel order at that price level. Exactly, where things are going to be bound. Just makes so much sense. And he's right. You should definitely, even if you have something scheduled this Wednesday evening, you should register and, you'll get a copy of the video. But if you're like me, you have these videos that you say you'll watch later, which means you'll watch them never. So my knee-jerk reaction is have your ticker symbols ready, have your questions ready, and just make it important and register for this event and then be there live. But just know you will get the replay, especially if you are there live. I love the replays because then you'll be able to, review something. You'll like write down as he's talking, you're like, oh, he said this at the 20-minute mark. And then you can go back and watch that particular segment again. So that's the best way to use replay videos. So register no matter what. I'm saying a lot of word salad there. Register no matter what. And I'll see you guys Wednesday.
Yeah, the link to that once again is in the chat. AJ, heading into the weekend, anything specific that we're keeping an eye on that we haven't touched on?
Well, next week, I think we're going to be talking a lot about our earnings season plays again. Those volatility plays that I think that, who was it? Sean from New York City might have been playing on Citigroup. So we'll talk more about those. I'll have some of those queued up for people to really analyze. So I think that, this earnings season, I think that the volatility plays are key. So, if you guys are going to go off from this show, start looking at some of those volatility plays. I think that we can queue some things up. Next week is going to be options expiration for July. So you should already be thinking about selling some August premium. So I think that the summer doldrums is a perfect time to be selling premium and hoping that it expires worthless. So yeah, just going after it. Usual as usual.
Yeah. And I think that once again, that webinar is going to be phenomenal. If you're tuning in anybody watching live in the replay, if you're tuning into AJ and Trading Trainer and the AJ Brown Show for the first time, show us some love. Hit that like, hit that follow, hit that subscribe button. Episode 141. As you can see, AJ, we've been pretty consistent about it. If you have any questions, leave a comment in the chat, send us a DM, head on over to tradingtrainer.com, sign up for the free access. You'll get some emails on how to get some more information on other tools. And enjoy the weekend, right, AJ? Thank you to Fossil for joining. Thank you once again, AJ, for you taking some time today, and thank you to everybody for tuning in. We truly do appreciate it. That's all we got for you for today.
Take care, everybody.
We'll see you next week.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh